market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump says the U.S. and Iran could clinch a permanent ceasefire soon. But Bloomberg also understands that some Gulf Arab and European leaders believe that a U.S.-Iran peace deal will take about 6 months to be agreed.
The stock market is good. The oil prices are coming down. And it's looking very good that we're going to make a deal with Iran. And it's going to be a good deal. It's going to be a deal with no nuclear weapons.
Meanwhile, Israel and Lebanon have agreed to a 10-day ceasefire, with Trump calling Hezbollah to, quote, act nicely during that period. With us now is Bloomberg opinion columnist Mark Champion. Mark, first of all, thank you for everything you do. There's great analysis on also what President Trump has been saying recently, which is basically, look, Iran has made key concessions in negotiations and that a deal could be announced fairly soon. Is that true?
Well, I think we have to discount very heavily what the president says just based on past experience. We've been very close to a deal they've been conceding and giving up. He's won. We've heard all this, for weeks now. That said, it is very clear that both sides want out of the war. And that's why we have a ceasefire. He says that this will all get wrapped up at the weekend. If it does, that will be an extraordinary achievement. You have a big file here. The nuclear part is complicated itself. That has taken at times, months or years to negotiate. To get that done, in a couple of days would be enormous. There are many other moving parts. And one of them is Lebanon. And you saw him push, the Israeli prime minister into accepting a ceasefire he didn't really want. And that clearly is, sort of part and parcel of the attempt to get the Iranians on board. And the Iranians are sort of, obviously, they claim that, this is all because, we won in Lebanon. But you have to discount those kinds of claims. You have to just focus on where they are.
And Mark, this is a real ceasefire, because we've had ceasefires before where actually there were still missiles being launched.
Yes, but there does seem to be a ceasefire. It is holding. And as I say, I think the key is that both sides do want out. That doesn't mean it's going to be easy to get a deal. And as I say, my guess is more likely that you're going to have rolling ceasefires. It's going to take a while to get a permanent settlement, which is a different thing.
So what happens to the Strait of Hormuz?
That's a really good question, and again, you can only sort of, conjecture as to how this will work. Both sides are kind of closing off the other's traffic, if you like, and they will both be sensitive, Trump to rising oil prices, the Iranians to the restrictions on imports and exports, and you can also imagine things slipping through as needed. If they can talk about this stuff if they're at the table. If they can have the Pakistanis mediate and talk about this stuff. There will be back channels, perhaps even military, and they can, there are fungible things here. So long as both sides want out and they see a way out, they will find ways to keep things from blowing up.
Mark, there was a deal. I don't know whether it's too soon to say, but there was a deal that was negotiated under Obama in 2015. Whatever we get next, is it going to be worse than that deal or just different?
It will be different. The time is different. What Iran has is different. So it will be. Whether, obviously, President Trump will, if there is a deal, he will say, this was a deal that made the war worthwhile. It's completely different from JCPOA. The bottom line is, so long as the Iranians retain the right to enrich uranium, it will be some form of the JCPOA of 2015, whether it's, a better version or a lesser good version, it will be different.
Mark, as always, thank you so much. Bloomberg opinion columnist there, Mark Champion. Now let's also bring Paul Wallace, who leads Bloomberg's economic and politics coverage from the Middle East. Paul, so what do we know about this potential U.S.-Iran deal? And also, if you're a Gulf state right now, are you really pushing for the deal?
Hi, Francine. Well, on the first point, it seems as if we're waiting for the U.S. and or Iran to announce an extension to their ceasefire, the ceasefire that ends, broadly speaking, late Tuesday time, US time, or they might even, as Trump sort of signaled that there's a possibility that they actually announce sort of something more significant than that, like an actual peace deal. So that's what we're waiting on now. There's no guarantee of this, and there is still a chance everything falls apart because the gaps between Iran and the US on a number of issues are still wide. I think the Lebanon ceasefire was a key piece of the puzzle for the US and Iran. The US almost didn't quite seem to get the significance of the war between Israel and Hezbollah in Lebanon when the ceasefire was initially agreed to just under 2 weeks ago, the Iran ceasefire, that is. But they certainly got that message in recent days. And I think that's why you saw Trump pushing hard to get the Israelis and the Lebanese state and, through them, Hezbollah into a ceasefire, which seems to be holding, although it's still very early days. We're only about 12 hours into it. For the Gulf states, I think this is a bit of a relief. Of course, let's say the most immediate thing is the Strait of Hormuz, and that remains shut. So, that they will be looking at that very closely. If there's some kind of extension to the Iran-US ceasefire and or peace deal announced by Trump that reopens Hormuz, I think they will be very happy. What they'll be nervous about is Trump trying to sort of extricate himself from this war without ensuring the reopening of this key waterway. That is something that they will be wary about.
Paul, thank you so much. As ever, Paul Wallace there with the very latest, of course, on the Middle East, but also the view really from the Gulf. Now, Wall Street banks say the dollar's war-driven haven rally is likely over as investors seek riskier assets. Adding his voice to concerns about economic stability, former U.S. Treasury Secretary Hank Paulson called on U.S. authorities to prepare a backup plan to avert a potential collapse in demand for treasuries.
This crisis is different, right? When you hit the wall and you're trying to issue treasuries, and the Fed is the only buyer, and the prices of the treasuries are going down, and interest rates are up, that's a dangerous thing. When are you going to hit the wall? I obviously don't know. It's impossible to know. But the law of economic gravity, you're not going to know that. So, and when we hit it, it will be vicious. So we have to prepare for that eventuality. And I think we need an emergency break-the-glass plan.
Well, with us now is Vasiliki Pachatouridi, EMEA head of iShares fixed income product strategy at BlackRock. Vasiliki, thank you so much for joining us. When you look at the war, I mean, again, so there's been quite a lot of volatility. You don't know what happens to oil or inflation. We spoke to a number of central banks in Washington. So, I mean, broad brush, what does it mean for your investments today?
Yeah, good morning, Francine. Indeed, I mean, there's been obviously a very volatile kind of period, but by and large, I would say markets, equity markets, but also fixed income markets have been very resilient over the past couple of weeks. I think a couple of things that I'm paying attention to, and certainly our clients and investors are doing as well, is the volatility that we're seeing, particularly on the front end of the rate curves. We're seeing that particularly in Europe and in the UK even more so. What does this do? It's weakening the hedging properties of short-term rates. And I think what that means for investors and portfolios, you have to pay attention to cash. There's a lot of cash in the system for different reasons. People have liabilities.
So is that your number one?
My number one would be just think about it. It's often forgotten, but it's a simple thing. There's a lot of cash in the system. Let's not look at cash only for capital preservation and liquidity. It can be a source of return, and it can also be a way to sidestep that duration risk that you have from front-end rate. That would be my number one. Second area would really be credit. We're seeing that in flows this month from bond ETF flows. I mean, just generally ETF flows are seeing re-risking into equities, but also fixed income. Credit in particular has performed really well. And then the last point, very simple, but inflation expectations, they haven't fed through yet into the market, particularly on a longer term horizon. So just think about some hedging.
I mean, like hedging also against inflation.
Exactly.
So is that gold, or do you have like inflation linkers? That means also more diversification.
Inflation link, we haven't seen demand for linkers since 2022 for obvious reasons. We're talking a lot about inflation, but it is really at the very short term that inflation expectations have gone up. We haven't seen that feeding through medium term and long term. So there is no premium priced in. So linkers, I think, potentially could be a good diversifier within a nominal fixed income portfolio.
Vasiliki, what do you do with European fixed income? I mean, if you look at, first of all, the different countries, the UK has different issues at the moment. I mean, is now a good time to get into gilts?
Gilts in particular, they're in a tough spot. Prior to the war, gilts were attractive, at least from a valuation standpoint, with BOE kind of expected to cut rates. I think they're in a more tough spot right now. Two-year gilts have had the most volatile period since 2022, since the gilt crisis. So more cautious on gilts. But again, it kind of paints to me that picture that front-end rates, both in the UK, less so in Europe, there are an area of tension. But overall, European fixed income, we like European fixed income. We like European investment-grade credit. I talk a lot about floating rate instruments, obviously because of ECB repricing expectations. And AAA CLOs is a good place to be because high-quality carry, floating rate bonds, and very good protections embedded into the asset class.
Vasiliki, when you look at Europe, I mean, a number of countries have issues that are domestic. We're looking at elections in France next year and things like that. Is it too soon to take a call on that because everything's driven by what the ECB does and energy crisis?
Right now, for fixed, I mean, equity markets have really kind of shifted maybe attention to kind of more enduring market drivers like AI. I think in fixed income, we're still having a lot of the market being anchored to inflation expectations, growth, which is particularly more of a focus in Europe. So ECB being more inflation focused, the Fed being more growth focused. So I think for fixed income investors, understanding next steps for monetary policy will be very important in terms of how they take duration. And I think overall people do look for flexible ways to invest in this market. Correlations can be challenging, so you need some help.
Yeah, we had a good conversation with Christine Lagarde, but also Joachim Nagel of the Bundesbank in Washington earlier this week. And actually, I don't know what you're expecting the ECB to do in April. For me, they were more dovish than I thought. It was very much they wouldn't really guide the markets either way.
Yeah, I mean, we had at some point the market expecting like 3 hikes this year. I mean, that's obviously, I don't even think we're gonna see 2. I mean, for now, I think they're going to be staying put maybe for the next meeting. But certainly, relative to the Bank of England, the ECB has more room to potentially take action relative to the Bank of England. But again, we're not going back to a 2022 scenario, both on the monetary side, but also on the fiscal side. Again, fiscal can be a concern, particularly for bond investors. We heard that also from the US. I don't see we're going to see that level of a response that we've seen in previous periods.
I mean, is there a concern that actually central banks, think of 2022 and again want to act too quickly because they were late last time?
I think there were lessons learned. We are in a different period now, and everything that I hear from policymakers is that there is a more considerate approach to what's needed right now.
Any dislocations in the markets that you're seeing which investors should be wary of?
Yeah, as I've said, I mean, credit, which was all eyes was on credit, IG behaved really well, but high yield also. And last month we had outflows from high yield and emerging market debt in particular. That has all stabilized. I don't see any particular areas of pressure kind of from a rising default perspective. Obviously, rising rates, inflation, the secondary effects of that as they feed through the economy, they can cause some headaches for companies and find out how they're financing themselves.
Vasiliki, thank you so much. It was such a great insight. Thank you for joining us. Vasiliki Pachatouridi, their EMEA head of iShares fixed income product strategy at BlackRock. Now, coming up, the Chinese president seeks to position his nation as a bulwark for international stability. We'll discuss more with Alicia Garcia-Herrero, the chief APAC economist at Natixis. This is Bloomberg.
Earn season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
The conversations that matter and the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Well, the Chinese president has hosted a number of world leaders this week as he seeks to position his country as a source of international stability. Earlier this week, Xi Jinping used some of his strongest language yet to describe the impact of war in the Middle East.
The world is beset by turmoil and the international order is in disarray. How a country treats the international law and order reflects its worldview, its values, its vision of order, and its sense of responsibility.
Well, joining us now is Alicia Garcia-Herrero, Chief APAC Economist at Natixis. Alicia, thank you so much for joining us. When you look at China's position right now, first of all, how are they looking at the Middle East and this energy crisis?
Well, let's see the Middle East as an opportunity for two reasons. First, they know that the war is not going to continue much longer. I think everybody's counting on the end of the war, and that helps China because if it had been a much longer war, that could have been much more dangerous in terms of maybe a global recession and Chinese exports suffering. But that's not where we are. Where we are is that basically the US, the Trump administration, has made a big mistake. That's how China is taking this, and China is very much profiting from this. They have enough oil. They're not suffering from that. They have, most importantly, a lot of refinery capacity that they are bargaining with for the rest of Asia. So in that regard, I think China is a relative winner from this conflict.
Alicia, do they need a resolution now? And do you know if China, does China want to be seen also as a power broker? Or the fact that they've stayed away from this crisis, is it because they're looking for other trade routes or other partners?
I think they're very comfortable with the Pakistanis basically being the brokers because they are behind the Pakistanis. And that's a very comfortable position because if it doesn't work, China is not meddled with the negotiations. So China wants to show that it is magnanimous, that is there, is trying to help to end this war, but it's not at the forefront of that effort.
Alicia, what kind of economic stability could we see actually with China going forward? I know, for example, Pedro Sanchez has been also pushing for a better relationship with China, but that's only if China is also strong enough economically to be a counterweight to the U.S.
Well, I should say that we had China's GDP data yesterday is going well, but that doesn't mean it's going to go well for the rest of the world, depending on China. So let me clarify. China is still growing out of exports. Retail sales grew barely 1.7%. And imports grew a little bit more simply because of the price effect of oil. But that's not Europe. That's not for Europe. So if Europe thinks that China is going to save them out of a very unstable, risky US, I don't think that's going to happen because China is basically integrating, moving up the ladder, competing with Europe in the European market and elsewhere. So in that regard, for Europe, China is simply a humongous competition. That's what it is so far.
But Alicia, and I keep on hearing from European states that they don't have to choose between the U.S. and China, but do they?
I don't think we need to choose, but we need to be fully aware that the U.S. is a much bigger market for European exports than China will ever be. And this is simply because China competes with us in terms of industrial capacity, is actually a much bigger exporter than the whole of the European Union already. So it's not so much choosing, it's knowing who is who. China is certainly relevant if you want to move up the ladder yourself. You need technology. If you manage to get some technology out of China, good luck, but that would be great. For that, Europe is designing this new Industrial Accelerator Act, which basically means that if China wants to produce in Europe, it will need to pass on some of that technology. For the US, it's the market that we care about. So they are not substitutes. This is something that European leaders should understand sooner than later.
Alicia, I mean, the other thing that we're trying to figure out is petro-yuan, right? So because of the Strait of Hormuz and the energy crisis, there are a lot of questions on whether there will be a bold move that could take years, if not decades, away from the dollar into another currency. Can renminbi and China benefit?
Yeah. So if we watch the RMB international use for the last, say, 10 years, we can see that actually it's still very small. But the small hypes we've seen in SWIFT data is mostly about trade settlements, and it hypes simply when there is more sanctions. That was the invasion in Ukraine when we had the largest jump in RMB settlements. It's happening now with Iran, and the reason is very simple. China offers a cross-border payment system that is not in the loop of SWIFT, i.e. the US, because they have their own messaging system within this CIPS, China International Payment System. That's it. But, if we look at the use of RMB for investment, for example, central bank forest reserves is actually coming down, and rightly so, because the yield on any sovereign bond, Chinese sovereign bond, is actually very low. So there is no investment story for the RMB, not even for the petro-yuan, because they created this market in Shanghai futures market, oil futures market in 2018, and it's barely 3% of total transactions. So it's not happening yet. I'm not saying it won't happen, but it needs a lot of a lot of things that China still has to do in terms of having a much more liquid market, opening the capital account, everything we've heard so many times.
Mm-hmm. Alicia, thank you so much. Alicia Garcia-Herrero, their chief APAC economist at Natixis. Now, of course, one of the other questions that we'll try and explore throughout the rest of the week, into next week, is what happens also with Taiwan. The picture for markets is one of perplexion, I guess. If you're an investor right now, you will have seen exactly what happened with this extraordinary rebound in global equities. That's slowing down a little bit this morning. Again, investors holding back from further big bets ahead of the weekend, whilst at the same time waiting to see whether Iran and the U.S. can actually extend their truce. I'm looking at oil, so we're looking at U.S. markets, but also oil, Brent dropping towards $98 a barrel. Again, after Donald Trump said Iran made key concessions. Coming up, he says it's a lasting ceasefire, President Trump, with Iran, and that's possible soon. So we look to discuss the outlook with Libby Cantrill from PIMCO next. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump says it's looking very good for a permanent ceasefire with Iran, though officials in the Gulf and Europe say it could take 6 months. A bad episode for Netflix as second quarter guidance falls short. Co-founder Reed Hastings also announces he's stepping down after 29 years. And fresh crisis for Keir Starmer, the UK Prime Minister facing calls to resign after it emerged that Peter Mandelson was appointed as ambassador despite failing security checks. Now, President Trump is striking an optimistic tone as he says the U.S. and Iran could reach a permanent ceasefire soon. But Bloomberg also understands that some Gulf and European leaders believe that a U.S.-Iran peace deal will take about 6 months to be agreed on. Well, for more, we're joined by Libby Cantrill, head of public policy at PIMCO. Libby, so good to speak to you, and there's so much to talk about in little time, unfortunately, as always. Thank you for joining us. When you look at, what does a peace deal look like?
Yeah, I think that is the open question. The question for markets is, does President Trump declare victory without actually really achieving any of the strategic objectives of the United States, which, of course, is to really try to neuter the ability for Iran to enrich uranium. Of course, President Trump is sort of the master marketer, so he may declare victory, again, without those sort of strategic objectives achieved. I think politically speaking, and to the point about does this take 6 months, and how long does it actually take for the oil market to normalize? This is something that for American voters, the cost of the sort of gas and groceries, the cost of a gallon of gas, the cost of a gallon of milk, those are the things that are really important. And so if this does take a prolonged period of time, even if President Trump sort of characterizes it as a victory, if gas prices do not decrease going into the midterms, this could really spell trouble for Republicans.
It feels like it's started about nuclear enrichment, but now it's also what happens to the Strait of Hormuz. So is Iran in a stronger position than it was 6 months ago?
Well, I think that is the fear, right? So foreign policy experts in the United States fear that we're actually in a worse position than we were in terms of the U.S.-Iran dynamic. And then if you go back to sort of the JCPOA, the joint nuclear deal that President Trump, of course, has been very critical of. He, of course, withdrew the United States from that. Does he get a deal that's actually worse than that? So in terms of the foreign policy objectives, I think it's a real open question of whether the United States has actually achieved those goals. And then politically speaking, again, I just can't emphasize this enough about what a headwind this is for President Trump, but also for Republicans.
Yeah, where's Congress in all of this?
Yeah, so Congress, so theoretically, should have or will vote on authorizing war. That is something that the Constitution sort of enables them or asks them to do. Of course, President Trump, as a commander-in-chief, does have quite a lot of latitude, but Congress will have to vote at some point in terms of sending more money to Iran and also sending more money to the troops, of course, and then also replenishing some of the munitions that we have depleted. So Congress will have to get involved. I think that vote probably is going to be over the next few weeks in terms of voting on some sort of supplemental package. And that is really where the rubber meets the road. You've seen Republicans be pretty accommodating of President Trump so far. That may actually end. And I will say this is something that privately folks are talking about on the Hill quite a bit among Republicans, is that there's impatience around the strategy here, around the goals, around the framework in terms of, the definition of success. And I think that patience is very much wearing thin. As the weeks go by without a resolution, I think you're going to start seeing maybe members of Congress start talking about that publicly. And potentially that will inform how they vote as well.
Is the military action? Do voters care, or are they just looking at the energy?
Well, the U.S. has sort of this luxury of being more isolated just geographically, and so foreign policy has never been an issue that has been sort of, at least in the modern history, has never been one of the top three issues for voters. Again, it is sort of this gas and groceries, and so as long as the price of gas is elevated because of this conflict, I think it will weigh on voters' minds. And then also, we just have to remember that, of course, President Trump's platform was really to kind of get out of these forever wars. Right. And he did that in his first administration, right? He sort of honored that campaign promise. This second administration with Venezuela, with Iran, potentially with Cuba, he's sort of really going against that. So that is also, I think, could be a political headwind for him. As of now, his base is holding in terms of the vote, the polling. But again, I think there's some fragilities there that if this is prolonged and protracted, especially if it's 6 months, I think you're really going to see sort of a political fallout.
There's kind of like a half joke in saying, well, it's when gasoline prices, hit $5. That's when the U.S. will be out of the Middle East and Iran because they just can't afford it because of the midterms. Is there like an elusive, is there a price or something that the White House is just really worried because it will have a direct impact on what happens in November?
Well, gas or petrol, petrol prices have increased by about 40% already. They are in that kind of $4 sort of on average. Some states, of course, there's a lot of geographic variability. Some states are seeing $6, $6 gallons of gas already. It's interesting. If you look at president approval ratings and you graph that against the price of gas, it is inversely related. It's kind of amazing, honestly. And you saw with President Biden that in 2022, when gas hit $5, that was his lowest of his approval rating. One thing I will just say, though, is that, and we tell our clients this all the time, we should not extrapolate the political environment in April of an election year 7 months forward. So lots can change, as we know. As we know. Already in 2026. It's been a very busy year. And so it is just important to keep in mind that even though the political environment right now for Republicans does look pretty challenging, things can change. And Biden was that. It looked very challenging for him in April of 2022. And then after the Dobbs decision, the Supreme Court decision in June of that year, things changed quite a bit. So we can't necessarily sort of project too much. But as of right now, if the election were held today, Republicans would be in trouble, particularly in the House.
Libby, what are you expecting from Kevin Warsh at the Fed? Again, I was at a dinner in Washington. Scott Bessent was quite, he said this doesn't change, this war doesn't change, huge dynamics, but maybe it delays cuts.
Yeah, that's interesting that he said. I think that this is sort of a concession, right? Because, of course, Kevin Warsh, as a chair, will be an important voice, but he's only one of 12 votes on the FOMC. And, of course, you need 7 to change monetary policy. So there is sort of a limited impact. And I think it's interesting the administration is maybe conceding that there is some sort of limitation in terms of the power of the chair. Now, Kevin Warsh, I think there's a good chance that he may not be in maybe until the summer, maybe until the fall. This is all going to be predicated on this DOJ investigation into Chair Powell. If that is not withdrawn, Senator Tillis, the Republican from North Carolina, he is holding strong. He is not going to give that green light to the Warsh confirmation. So I think there's an open question whether Warsh is even in at the Fed. But even if he is, again, he's only going to be one vote.
Yeah, and then President Trump, I think on Tuesday, again went really hard on Jay Powell, saying if he doesn't resign from the Fed, because he can stay on as basically governor. Yeah. He said he'll fire him. The market took no notice of this.
No, because honestly, I think it's partly because of the oral arguments around the Lisa Cook hearing that's been in front of the Lisa Cook case has been in front of the Supreme Court. Of course, he's tried to fire the sitting governor, Lisa Cook. The Supreme Court looks like they probably won't allow for that, and so I think the market's sort of ignoring much of this. And again, I think they're also just focused on the fact that all these people are just one vote.
Okay, so interesting. Libby, thank you so much.
Thanks so much.
Libby Cantrill, Head of Public Policy at PIMCO. Now, the Barclays chief executive says the bank is still committed to expanding in the Middle East despite the Iran war. Speaking to Bloomberg, Van Ken also said markets are looking through the long-term issues facing the global economy.
There is a short-term look-through in the markets, especially the equity markets, as to the prospects of both the war ending quickly and exuberant spirits and investments and IPO calendar and deals. That's what keeps the stock market going. But in the background, humming slowly, are the long-term consequences, which is what will give central banks, pause as to how they deal with this situation.
Well, a sell-off in gilts that started yesterday seemed to be easing ever so slightly. It was sparked by renewed calls for the UK Prime Minister Keir Starmer to resign. It's been revealed that the Foreign Office granted Peter Mandelson security clearance last year against the objection of vetting officials. Well, Bloomberg's Markets Today editor Kit Reese is here. Kit, thank you for joining us. I mean, it just puts Keir Starmer in a really, really difficult position. So talk us through the latest allegations.
Yes, so the latest allegations revolve around the revelation that Peter Mandelson was appointed US ambassador having failed these security checks. So it raises questions over Keir Starmer's judgment. There have been calls for him to resign from the opposition leaders. So it does bring back memories of February. And, it was a similar situation there. And we saw both bonds, gilts and the pound coming under pressure. But the reaction has been a lot more calmer today. This is perhaps because there's just so much going on in the greater scheme of things. Iran, worries about inflation, all those kind of things, kind of raising these risks. But it does introduce this political risk. It cannot be ignored. And, raises questions kind of going forward, what's going to happen at the May elections. So, yeah.
I mean, these are a big deal, right? So you have local elections next month, and it looks like Labour may not do as well. So what are the markets pricing in?
It's very hard to disentangle the political risk from all these other things, but it has to be highlighted that the UK gilt does have one of the highest yields amongst developed bond markets. So, there is a sort of a heightened political risk being priced in there, so I wouldn't argue with that. And the whole thing comes at a very interesting point for Keir Starmer. We've got the Iran war, it's raised all these worries over inflation, what central banks are going to do, are interest rates going to go up, the cost of living crisis. prices, all these pressures, got fuel going up, energy costs, mortgages might go up. So there's a lot on households' minds, and there's going to be a lot of pressure on the government. So it's not going to be very, very particularly helpful for Keir Starmer. And I mean, the big kind of worry is if there is a replacement for him, further down the line, perhaps, what will their approach be to spending? There's a worry that they won't be as fiscally prudent, so this could, put pressure on bond markets. So overall, there's a lot for markets to digest at the moment, especially heading into the weekend. Going to be keeping an eye on what happens in Iran, but it is certainly unhelpful for, the UK bond market and for Keir Starmer.
Okay, thank you so much. As always, Keir, of course, our Bloomberg Markets Today editor. Now, coming up, investors look for a sign that Netflix can keep hold of subscribers. How will the departure of co-founder Reed Hastings affect the business? More on that next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the French luxury group Kering is seeking to double future profitability, in part by rejuvenating Gucci, its largest brand. The chief executive, Luca De Meo, has unveiled his strategy 7 months after taking the top job. Now, the former Renault boss has been speaking with Bloomberg's Caroline Conan about the challenges ahead.
I think it's already many years where even the industry is impacted by a strong volatility, also geopolitically everywhere. So this volatility is factored into the plan because we're trying to build a company that is more agile, that is lighter, etc. Exactly to master this volatility. We believe in the region, in the long-term potential of Middle East. I think long-term it will continue to grow, so we have no hesitation to continue to invest as a very important customer, etc. So I think unfortunately I hope that this thing will come down very quickly, hopefully, and but we believe in the long term that the Middle East will be a key region for luxury. Even if the aspirational consumer may not be here right now. In the Middle East, I think you have a lot of people that are in the core category and in the VIC category. This is the heart of the business there. Obviously, at Gucci, we also have Demna, who came as a creative director, did the first fashion show in Milan in February. Dior, Chanel also have new creative directors, which is making the market very competitive. How long are you giving Demna at Gucci? I think, I think one of the issues why Gucci has been, more recently in troubles was the lack of stability, in the management team on the creative side with, many changes. And I think it's very important for me that I can assure stability for that team, both on the management side and on the creative side. So no, it's not about this, it's not about, giving time or etc. I think we just have to all work together to make sure that Demna can express his full potential. He's one of the greatest of this generation, and he has now in his hands one of the most beautiful brands, in this sector. So I'm pretty optimistic that everything will work. And things well done require time, right? And we want to do good things with Gucci.
Well, that was the chief executive of Kering, Luca De Meo, speaking with Bloomberg's Caroline Conan. Now, Netflix has disappointed investors with second quarter guidance that fell short of analyst expectations. Now, the streaming giant also announced that co-founder Reed Hastings, who's also on the board of Bloomberg, will be stepping down after 29 years. Now, we're joined by Mandeep Singh, global head of technology research at Bloomberg Intelligence. Also with us, Bloomberg opinion columnist Parmi Olsen. We'll talk about AI and the little thing called Mythos that seems to have had wide repercussions also for all of Wall Street. So, Mandeep, let's just start with Netflix first. If you look at Netflix, look, they're not doing great. It's just because there's so much content out there from platforms. I feel like we're in a, real battle for eyeballs.
Yeah, and they're missing that AI story that when you look at Meta or Google, they have that AI tailwind which will get reflected in their growth rates. I mean, Meta is expected to grow high 20%. Yeah. So low teens growth is nothing, that investors want to pay for. And Netflix was trading at a higher multiple compared to, let's say, a Meta.
I mean, I guess the wider, and this is a corporate, Netflix problem. What's also really interesting, Parmi, is what's happening in the AI space. And I do feel like, what we've learned over Mythos in the last 2 weeks, I mean, there's so many questions that we're trying to get answered. What are your top 3 questions?
Oh my God. Well, I'd love to know when Anthropic is going to give greater access to this tool. We know it's only given exclusive access to this new powerful AI model, which had this emergent property of being able to launch its own cyber attacks. Now, we have to remember the newest AI models that are coming to the fore now have agentic properties. So if a hacker previously was using something like ChatGPT to check a site for vulnerabilities, and ChatGPT or Claude from Anthropic was giving them that information, now those tools can actually do things for the hacker. They can actually find the vulnerability and exploit the vulnerability. And that's what is worrying so many people about this tool. And I think it really is a wake-up call for not just the banks that were all assembled by the U.S. Treasury Secretary Bessent recently, but particularly small to medium-sized businesses. There was a report that came out from the UK's AI Security Institute, which found actually well-protected companies should be okay with these kinds of models. It's the weakly defended systems that could be vulnerable.
Yeah, and does it also depend on I guess, regions? Because you need to push for access, as Parmi said, to try and play around with it. But there could be other models from other companies.
I mean, it sounds like right now Anthropic is really leading the pack when it comes to that intelligence layer that can uncover some of these cybersecurity vulnerabilities. So to my mind, Microsoft always had, bugs in their operating system and software, and companies discover that. But obviously, this has become a much bigger deal, given it's coming from a foundational frontier model company. At the same time, I do think companies will adapt to the vulnerabilities. They will obviously figure out what is it that is most exposed and patch it. But this is no different than, what we have seen with software over the past 30 years in terms of fixing the bugs they have.
Parmi, how much of this is hype, either on the good or the bad side?
I think two things can be true at the same time. True. I think Anthropic, in teasing a model, it's so powerful we can't release it. OpenAI did that with GPT-2, and then they did release it, and it was fine. But it creates this idea of scarcity and excitement, and that plays in their favor ahead of their IPO. On the other hand, I think it is true. We've had independent verification that these models can be dangerous. And to Mandy's point, patching systems used to be done every month, every few months if you're a bank or you're a software company. Now these zero-day flaws are being found and potentially exploited within hours. The time between a vulnerability being exposed through responsible disclosure and a possible attack has collapsed in the last 4 to 5 years, from like a couple of years to now just 4 to 5 hours. So companies need to move much more quickly in how they fix these flaws because these AI tools are out there.
We talk about companies, but this could also be governments. Right?
Absolutely.
If they get operating systems on how planes fly, this is a disaster zone.
I think there was an attack on the Mexican government where some of their data was compromised. So from that perspective, these are very effective tools for hackers to leverage, and really things can happen in real time. So that's what's changed from prior sort of vulnerabilities, that attacks can happen at a much faster pace than they used to with these tools being out there.
I mean, in terms of timeline, when are we expecting to have just a clearer picture? Because we know that also Europe is trying to understand these systems. If you're a European company, and I've heard this in the corridors of Washington this week, is that actually you have even less access to the models that the U.S. companies have. So if you're, for example, a European bank, you'll have less access than a big Wall Street bank. Yeah. So is this region more vulnerable?
Well, I think there was some consternation among European Union regulators that they did not get access to Mythos. However, as I mentioned, the UK's AI Security Institute, based right here in London, is kind of seen as this global neutral arbiter of what makes safe and secure AI. They're staffed with quite a lot of good AI researchers. That's based here in Europe, and that has been providing information immediately once they do their own due diligence. So I think that's something to look to as a good thing. But of course, generally speaking, we need much more transparency from the companies. They're not obliged to share their information with the UK's AI Security Institute. They're doing that voluntarily, and they are becoming more closed with each model. They're providing less and less information, and that needs to change.
And they're providing less information because this is a commercial war.
Absolutely.
I mean, at the end of the day, they just want to make money. Right? If they're selling.
Absolutely. If we didn't have the race dynamics, if we didn't have geopolitical pressure and FOMO among governments and companies, I think they would absolutely be much more transparent. But this is a winner-take-all game. There wants to be geopolitical advantages, and so I think it plays in their favor as much as possible to not release too much information.
And Mandeep, what do we know about China? Again, one of the things that always strikes me as a non-AI expert, trying to understand as much as I can, is when they say, "Oh, China's 6-9 months away from us." I mean, that feels like a very short amount of time.
Yeah, and look, these models are becoming more and more capable. So the Chinese models are also improving in capabilities. And, some of these attacks can come from any model. At the end of the day, I don't think Anthropic knows exactly how hackers are going to use their model, which is very capable. So from that perspective, if you are in the business of hacking, you've got a lot more ideas than, companies that are developing these models, very powerful models. But so from that perspective, the attacks could come from any model.
I mean, presumably, if I need to defend myself, do I use Mythos as well to tell me vulnerabilities and how I can fix it?
Yes.
And you would hope so. I think that's why they are going through this process where they are having these entities play around with that first. Yeah. And hopefully they are telling them where the vulnerabilities are. But that's where the risk lies.
There was a J.P. Morgan person who was saying recently, behind the scenes, that they're very excited about this because now they can use this tool to look for vulnerabilities in their own systems and potentially save costs on human cybersecurity experts. I think that's a little bit short-termist in thinking because cybersecurity is a cat-and-mouse game. You might have this tool, but the bad guys will have the tool too eventually. And so that doesn't mean you can just cut staff. You're probably going to need them down the line too.
I mean, to you both, how much, should we be paying attention to AI and how it's also changed the war in Ukraine, but especially in the Middle East?
Yeah, absolutely. I mean, the claim that Anthropic is making is this model has got a lot more intelligence than their prior versions. So from that perspective, it's all about imagining what you can do with a prompt or with an agentic functionality. And if it can really automate a lot of the patching, that can save a ton of time and probably potential cyber attacks. So from that perspective, the capabilities of these models need to be well understood. And I'm sure that will be the case in this trial period when, all these entities are looking closely at the model.
I mean, is it something that also, I don't know whether AI now chooses targets. I mean, there are a couple of things. But is this, we saw Anthropic, versus the DOJ in the U.S. Is this just going to take much more space?
I think AI is becoming integral to warfare. We saw with Project Maven was a part of the Pentagon that's been around for quite a number of years already. So the U.S. has really been pushing that. And Anthropic's Claude, before Anthropic, what had that bust up with the DoD, was used to help with choosing targets, to help choose targets to strike in Iran. Not deciding them, but providing the intelligence to do so.
Okay, thank you both. We could talk for another 2 hours, so you'll have to both come back on. Bloomberg opinion columnist Paulson and Mandeep Singh from Bloomberg Intelligence. Up next, it's Bloomberg Brief, and this is Bloomberg.